All right, y'all, we are live on this beautiful Wednesday afternoon. God bless everybody in the name of Jesus, Yeshua the Messiah. And today, things are about to get bullish, baby. We are bullish. We are bullish on Bitcoin, 500K, a million K. We don't know. We're going to wait and see, because today is the day that Jerome Powell comes out the closet with his interest rate decision. Flapping the old gums, and that's right, he's in the closet with a deep, dark secret. He's got some nerve, because the Federal Reserve ain't federal and it ain't a reserve, but man, he's the one in charge of the interest rates. And here's the thing, man. Usually what happens today, alright, usually what happens on FOMC is we get an injection of volatility. We actually get two injections of volatility. One, when the interest rate decision is made, alright? In approximately, let's see here, 45 minutes, a little bit less than 45 minutes actually, we're going to have the interest rate decision, and it seems that pretty much right now everybody's expecting that interest rates are going to remain the same. Everyone's expecting right now interest rates to remain the exact same. And if we take a look over here at the CME FedWatch website, one of my favorite websites to watch, CME, we can see, yeah, it's pretty much baked in the cake, guys, 97.7%, and this is very, very accurate here at FedWatch. CME Group thinks that the interest rates are going to stay the same, but we are at a very interesting place, not only for Bitcoin, but also for stocks, because, man, things are changing, guys. Things are changing, things are brewing, things are changing. Major shout out to everybody in the chat, guys. It's going to be a good day today. It's going to be a good stream. Shout out to Sniper. Shout out to Not Wrecked Day Trader. Trump said, cut now or else. Shout out to Suzanne Ross. Shout out to Black Gambit. Shout out to Derek. Shout out to Bruno Cyberpunk from Brazil. Shout out to Radio Friendly Unit Shifter. What's up, the Video Kingdom? God bless you. Good to see you. Shout out to Fan Kai Siam. What is going on? Shout out to Tamland Wilson. Comes out the dang closet. Yeah, he's got a secret. It ain't federal and it ain't no reserve. All right. Now, guys, as usual, if we can get 1,000 likes within the first half hour, we're already halfway there. We will be giving away 1,000 US dollars. Also, guys, shout out to BloFin, because BloFin is giving away $500 today as well. All right, BloFin giving away $500 today as well. So, if you want to win $1,000, like the video. If you want to win one of BloFin's giveaways, all you have to do is sign up to BloFin using my link. Link is in the dang pinned comment over here. Is it? Link is in the description. Link is in the description of the video. Right here. BloFin. Sign up using the link. You get VIP4 fees. You get 0% make order fees, 10% cash back, and a chance to win $100. We're going to have $500 giveaways this live stream. So if you sign up to BloFin right now, you don't even have to deposit to get $100 to trade with. Alright, it's going to be a good stream today. Also, got to give a major shout out to ANTARCTIC Exchange, guys. Decentralized exchange. Blue and purple, just like me. And if you sign up using my link, you get the best deal on fees. Also, guys, today is a very, very, very exciting day, because I have just began to release a free trading course on my YouTube channel. All right, so head on over to the Jason Casper YouTube channel. All right, and pop on over to videos. And I have just released my first video right here, a free trading course. And today, after this live stream, the second session will be out. We're going to be releasing these every single weekday, 18 sessions to learn how to trade for free. So make sure to check it out if you're interested in learning how to trade for free. All right, for free, for free, for free. Isn't that crazy? For free, baby. Now, we got some things to talk about. I want to take a look at Bitcoin on the weekly chart. Because when I look at Bitcoin on the weekly chart, guys, I get more giddy than a dang schoolgirl. Sorry, I'm not supposed to laugh like that on the internet. I mean, ha 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 ha. Ha ha, yes, ha 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 ha. Now look at Bitcoin here on the weekly time frame, guys. We have some very interesting indications happening. First of all, look at this. We are coming down to the trend line of the bull market. Getting a bounce trend line from the bull market. Now, when we take a look at our oscillator, market Cipher B, what do we see? We see a pattern that has played out every single high or low in this uptrend for the last 2 years. When we print a hidden bullish divergence on the weekly, which is exactly what we have confirmed here 2 weeks ago, that is the high or low for the next big breakout. All right, so here we are printing this signal that historically speaking has given us the next big breakout. When we go to our lower time frames like the 4-day, what are we seeing here on Bitcoin? We are seeing the very interesting bullish divergence pattern, okay? If you take a look at the price getting lower to the trend line, look at the oscillator. Big, juicy left side, skinny right side, giving us the coveted uneven butt cheek pattern. You got the gravy and the ravioli coming out of the left butt cheek, you poke it with a needle, you squeeze out the ricotta cheese and slurp it up. Mmm! Right side skinny, fat-free cheese, carb-free pasta. We superimpose onto the chart, we can see it lines up perfectly, the resemblance is striking. We have bullish divergences across the board as we're coming down to major support. Now, let's go to the weekly time frame again. Let's put on some classic indicators. For example, the McDonald's pattern. Why do they call it the McDonald's pattern? Well, because if you trade with the MACD instead of market cipher, you're going to end up working at McDonald's. All right? But I just want to show you, all the indicators right now are pointing to bullishness. Okay, we have the MACD about to cross the zero line. On the weekly, about to get across here. All right, the last time we got across on the MACD, guess what? Bam! The big breakout. But time before that, we get across on the MACD, guess what? Bam! Big breakout. All right? Time before that, we get across on the MACD. It was, I mean, really, the cross on the MACD did mark pretty much the bottom of the bear market. And you could say that the summer of 2022 was the bottom of the bear market. Yeah, we made a double bottom. But this is some serious stuff. All right, MACD cross on the weekly, very bullish. Even if, I mean, look at this. You know, MACD cross for that last big push of the last bull market to give us that all-time high. Everything right now is pointing bullish. All right, it would be dumb to be bearish on these high-term time frames here. In my opinion, it would be dumb to be bearish right now. If you're a bear right now, you're going against what the charts are saying. In my opinion, I mean, what do I know? I'm just a guy in the treadmill with a dang, what is this thing anyway? A dang wig. All right, we've got a 80s hair metal wig. All right, definitely not financial advice. Make sure to smash up the likes, everybody, because it was so close to doing our giveaway. All right, now hang on. Everything right now in the chart says bullish, but remember, today is FOMC. Jerome Powell's coming out the closet with his dirty secret. The Federal Reserve's not federal. It's not a reserve. All right, but here's the thing about the Fed. The Fed is injecting liquidity into the market right now in general. All right, check this out. Let's just check this out here. All right, just recently, Federal Reserve unleashed another $42 billion in 10-year bond purchases. Liquidity flood incoming. That's what that means. All right, this is basically printing money without printing money, okay? Because they're just putting money into the market by spending $42 billion. Where's this even come from? No one really knows, all right? No one really knows. Pretty interesting, right? Pretty dang interesting. Something else, very interesting. Check this out, all right? The global M2 money supply versus Bitcoin. When we take a look at the chart, Bitcoin trails behind the global M2 by approximately 81 days. Now look at this projection here. Now again, I'm not saying it's going to happen, but look guys, when you have multiple things like the technicals and the fundamentals lining up, you're in for something big here. All right? Bitcoin is 81 days behind M2. This is our trajectory to the upside. Very, very interesting stuff. Very, very interesting times. Now, as we also know on the Bitcoin chart, where are we right now? We are at the line in the sand. We are at the line in the sand. What line do you ask? And what sand do you ask? Nobody can clearly tell us what line or what sand we're talking about, but here's the main deal. The Bitcoin price right now, if we just strip down everything, completely butt naked, and look at the high-term time frame chart, all right, what do we see here? We see that the Bitcoin price, after Trump wins the election, consolidates in a fair value zone between the price of $105,000 down to about the price of $90,000. This was our fair value zone for quite some time. Then Bitcoin breaks below the fair value zone, okay? Finding support on the bull market trend line, we have now broken back inside of the fair value zone. What does this mean? Well, objectively speaking, this means that the market wants to trade Bitcoin back inside this fair value zone. As long as we are trading above this blue line right down here at about $90,000, the probabilities say we're coming up to about $105,000 Bitcoin. Very quickly, could happen very soon. Do not underestimate the power of the weekly market Cipher B. Uneven butt cheeks, baby. Gets me more excited than the time me and Carl from the Moon drove to McDonald's in his Maserati to get a Big Mac meal. All right? This has me more adrenaline pumping than the time I got pulled over by the cops trading and driving, because these new cars put the dang trading view screen right there on the dashboard. It used to be a tape player. If you guys remember tapes, it used to be an 8-track player. All right? Now I'm getting pulled over, have to pay all my trading profits in dang tickets. Basically get charged with manslaughter. Going 49 miles per hour in a 15 mile per hour school zone trading. Oh my goodness. Jason, what's wrong with you? I'll tell you what's wrong with me. The Bitcoin price right now is coming up to the most important area of resistance that we have had in the last 20 Bitcoin years. Now, 20 Bitcoin years means basically since February. All right? That's the Fibonacci golden pocket from the all-time high to the low. If we can reclaim this level, $97,000, and most of the volume is below us, well, what does that mean? That means we are going to blast off, man. We are going to grab all this liquidity that we made here. All right? See all these highs? These are all shorts with their stop losses, 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 their stop losses. All right? However, this is the bullish case. Remember, we're traders. We're not traders. We're traders. We're trading. What are we trading? We're trading Bitcoin, stocks, Forex, commodities, indices, 80s hair metal blonde wigs. All right? We're trading these things. Keep in mind, guys, this is the line in the sand, meaning there is a chance that we get a pullback from here. The chance is dwindling as time goes on, for sure, and we might actually see something like that happen when Jerome Powell comes out the closet flapping his dang lips. This is the place where we could see a rejection from. Would that make me bearish on Bitcoin? Well, given the high time frame macros, technicals, fundamentals, McDonald's, macaroni and cheese, and Big Mac meals, Carl from the Moon, and all these different indications, no, it wouldn't make me bearish on Bitcoin. What it would do is it would remind me, Jason, look, what does Bitcoin always like to do? What does any asset like to do most of the time? What does any asset do most of the time? It likes to trade sideways always, all right? Most of the time, the asset trades sideways. We can see that here, back here. We can see it right here. We can see it right down here, trading sideways for this whole time. We can see it up here last summer, trading sideways the whole time. We can see it over here in the winter of 2024, this sideways range. Then the painful 8 months of nobody knowing what's going on up here. What did we do? We simply traded sideways. Oh my goodness. Most of the time, you mean to tell me, Jason, most of the time I'm waiting for the big breakout. I'm waiting for Bitcoin to go to $1 million so I can finally tell my uncles, my aunts at Thanksgiving that I was smart. I bought Bitcoin and they didn't trust it because they said, well, what's it backed by? And you said, well, what's the dollar backed by? They had nothing to say, but it didn't matter because they're older and they think they're smarter than you and they think you're dumb for buying crypto, and now you can finally tell me you're a multi-billionaire. Look, sometimes we do get that move that initiates that Thanksgiving conversation. But 90% of the time, we trade sideways. Now, I want to just point out the fact that we do have a sideways range right here. Okay? You see, we have the sideways range right here. Here we go. If we get a rejection, we have to acknowledge the fact that we could continue to trade in this sideways range for a little bit before the big break. And is the big break coming? In my opinion, yeah. All right, I'm talking myself into it. I even have conversations with myself. I start to doubt myself. You know? Well, I don't know, Jason. I mean, I don't know. Looking kind of bearish, right? Wrong! No! Are you sure, Jason? Yeah! I'm sure. I've never seen a more bullish chart in my life. Okay? But look, if we reject from the most important resistance that we have, the high volume node confluence with the Fibonacci golden pocket, then yes, we could actually continue to trade in this range here before the big break. Just saying. So am I bullish? Yes. If we get a pullback, will I still be bullish? Yes. Why? Because the weekly time frame, bullish divergence confirmed. Historically speaking, leads to the big break. The 12-day, very bullish looking. Confirmed green dot on the 12-day. The 6-day, bullish div. The 5-day, bull div. The 4-day, bull div. 3-day, bull div. 2-day, bull div. 1-day, bull div. 12-hour bull div. This bottom looks really nice. All right. Why else am I bullish? Because of the things that we've looked at before. The Federal Reserve is buying billions of dollars in bonds right now. They're injecting liquidity into the market. We're seeing Bitcoin following the M2 global money supply, 81 days behind. M2 global money supply is pumping like crazy right now. Why is the money supply pumping like crazy? Well, there's money being injected into the markets right now. The Fed somehow is getting the money, somehow, to buy bonds, billions of dollars worth. We got money coming in. When money comes in, that money goes into crypto, baby. Goes into crypto, okay? And that's just one step away from printing. Now, I don't think the Fed's going to cut rates today. I don't think the Fed's going to cut rates today. I don't think Jerome Powell's going to be fired. I think that's all political theater. But one thing that's for certain about today is when Jerome Powell comes out the closet with his big secret and he says, ladies and gentlemen, well, we've been doing our best to get interest, inflation, down to about 2%. And he starts talking. He's going to release the big news. He's going to say, guys, and we're not federal and we're not a reserve. And Fort Knox has no gold either. Wait, he's not going to say that. But when he starts talking, I really do think that his perspective on the market is going to give us our short-term direction. If he comes out very dovish and he says things look good, I think that actually could initiate the break of our key resistance to potentially hit our $105,000 plus target. If he's hawkish, that could initiate the pullback that gives us another move to the downside of this range, which honestly, look, here's the deal. Even in worst case scenario, I'd say, coming back down to test the lows in the 70s. I know, it's so funny. It's so funny. Isn't it so funny? Everybody here, shout out to all the people who were in my streams when Bitcoin was at 100K, 90K, saying we're never going to see the 70s again, right? They couldn't imagine. They couldn't even imagine it. Guys, we have 8 minutes to get 120 likes to do a $1,000 giveaway. But look, they couldn't imagine it, even if we get another move back down to the 70s, which now people can't even imagine. Look at that nice rounded bottom. And you know how much I love me some rounded bottoms. And why do I love rounded bottoms, baby? Because the rounded bottoms mean we're going to get a bounce. The rounded bottom means we're going to get a bounce. All right, look at this. Look at this beautiful rounded bottom right here. The uneven butt cheek pattern. It fills my heart with joy. To see that juicy left butt cheek is like a giant slice of oversized pizza. Buffalo chicken pizza with extra buffalo sauce. And you know that buffalo sauce is 99% soybean oil, GMO soybean oil. You wonder how someone achieves a physique like this is by eating a diet of 99% soybean oil. Genetically modified, highly hybridized American wheat, doused in genetically modified, highly processed soybean oil. And of course, that will lubricate anything. Enough to just fire off a piston, a bullet through the chamber. Bam, baby! You got that nice lubrication in the chamber. We're about to fire it off to a new all-time high, baby. Ooh, man. It's feeling kind of good, all right? Okay, it's feeling kind of good. Now, again, I really think that today is going to mark whether or not we break the resistance and go the distance, or we get a pullback and look to get in another long. And I'll be honest, based on our weekly, based on our 12-day, even based on our monthly market Cipher B right now, look at this monthly market Cipher B, man. We are so close, maybe a month away from the VWAP, this yellow oscillator crossing the zero line. Last time we got that, man, what happened? 120%. Time before that, what happened? Oh, wow. I mean, it's so much the measuring tool can't even fit on the screen. It's just amazing. I can't even imagine. Makes me want to fire off a new long full account, 100x, baby. Don't ever do that, by the way. Don't ever fire off your full account, 100x. Okay, but if you do want to fire off a juicy trade, I highly recommend BloFin, currently offering 10% cash back. Looks like we're doing our giveaway, guys. Congratulations. We're going to do a $1,000 giveaway. BloFin, 10% cash back. Anything you deposit in your futures account, they give you 10% back. A chance to win these prizes. Plus, BloFin, link in the description, is offering VIP4 fees if you sign up using my link, which basically means you don't have to trade billions and trillions of trading volume to get 0% limit order fees, 0.04% take order fees. And today, BloFin is going to be giving away $500. 5 people are going to win $100 today who have signed up to BloFin using my link. So if you use my link, you don't even have to deposit to win $100. Also got to give a major shout to ANTARCTIC, decentralized exchange. Sign up using my link. Lowest fees, period. S VIP privileges. Why is it called S VIP? Because it's super secret. All right? Super secret. No matter what, unless you use my link, you will not ever get these low fees. 0% limit order, 0.015% market order. It's basically no fees. All right? Decentralized exchange, meaning you hold your own crypto on your own wallet. You don't have to worry about KYC. You don't have to worry about accounts getting hacked, none of that stuff. Also, guys, got to give a major shout out to Jason Casper, who is releasing a free trading course on YouTube. All right, check it out. Just released it, my newest video, 22 hours ago. And today, after this live stream, session 2 will be released. So if you want to learn how to trade for free, check it out over on YouTube. Also got to give a major shout out to the Casper crew, because we have been giving these long trade setups in advance the whole way up, man. $86,000 level, $93,000 level, 93.7. We've been taking these long trades along the way, baby. And we are currently up in these juicy longs, all right? As we're coming to resistance, locking in the profits, all right? Locking in the dang profits. And in about 15 minutes now, JP, he's going to be coming out between you and me. And he's going to be giving us that rate decision. Shout out to everybody in the chat. Shout out to Evan Wolfson. Shout out to Time Lights Out. Shout out to Preparing for War, Whales Ready to Buy the Dip. Shout out to Cyrus. What's the BloFin code, guys? Look, the link to sign up for BloFin is in the description of the video. In fact, why don't I just put it in the... I'll pin it. All right? Sign up to BloFin. You don't even need to deposit in order to win $100. I'm going to pin the comment here. All right? There you go. Pinned comment in the YouTube chat. Okay, so, man, let's take a look at some other crypto assets here. ETH. Okay, we got to talk about ETH. Because as we're looking at everything happening, as we're looking at the Fed putting billions of dollars into bonds, as we're looking at market Cipher B printing a hidden bullish divergence, as we're looking at the weekly McDonald's crossing from the red into the green, we are also seeing Ethereum, in my opinion. I mean, let's just objectively look at this. First of all, am I ignorant? Is my naivety getting the best of me? Am I just an idiot YouTube moon boy? Maybe. But here's the deal. I don't think the top is in yet. I don't think the top is in for many, many reasons. I've gone over them now. Ethereum is literally trading within the bear market range. All right, Ethereum right now is in bear market prices. We're seeing ETH at a price which it was back in 2021. All right, if ETH can reclaim $2,000, man, we are gonna. My target for ETH, my conservative target, is 5,500. My more liberal target is going to be 8,500 for the cycle top. All right. Maybe you even consider my liberal target conservative. I don't know. Maybe you do. But basically, here's the deal. Let's assume ETH tops out at $5,500. Just based on upside potential here. All right. Just based on upside potential alone. Even if ETH dips down to $800. All right. If ETH dips down to $800, guess what? There's still 4 times more upside than downside. Even if ETH gets a scam with to 800, there's still 4 times more upside than downside. Even if ETH comes down to $300, there's still 2.5 times more upside than downside, guys. You see, 2.48% risk to reward if ETH comes to $300. ETH right now, in my opinion, is a really great opportunity. I mean, this is crazy. I mean, it's crazy. Think about when ETH was at these prices. People are like, man, if only I bought ETH in the bear market. Well, this is our time, and it's either going to play out beautifully, not financial advice. I cannot even imagine ETH dipping below $300. To me, this is a very safe play, all right? And I don't take what I'm saying here lightly, even though I'm acting like a total fool on the internet on a treadmill. I don't take what I say here lightly. I truly believe with all my heart that this is an amazing opportunity right now, because I don't think ETH is dead. Some people say, oh, ETH is dead. ETH is dead. I don't think ETH is dead, man. It's the number 2 market cap coin right now, right? Or am I wrong? Am I wrong? I might be wrong. Let's go to coin market cap. I haven't got the coin market cap in so long. ETH, number 2 crypto coin in the world. All right. 218 billion total market supply, total market cap. All right, strong number 2 asset right here. That means when big money's looking at crypto, trust me, they're not looking at fart coin. All right, they're looking at Bitcoin and they're looking at ETH. ETH, baby, give me some ETH. Put some extra teeth on my sandwich. I want some extra teeth on my sandwich, my turkey and cheese. Give me some ETH, baby. Baby, please, baby, give me some extra ETH. Man, ETH is making me talk with a lisp. All right, we got Bitcoins and we got ETH. All right. Shout out to everybody in the chat. We got over 2,000 people. We're definitely going to be doing a dang giveaway today. And in about 13 minutes, is Antarctic accessible for those trapped in the US? Andrew, yes. Yes, this is why we created Antarctic Exchange. It's a decentralized exchange, bro. That means there's no way that it won't be available in your region. It's decentralized. You're not putting your money into anyone's platform. Everything's held in your own cold wallet, and all the contracts are done via smart contract. All the transactions are done via smart contract. All right, so basically, you hook up any wallet you want to the exchange. And what else is great about the exchange is it's made by traders for traders. So if you're trading on Antarctic, you own the exchange. You get paid in the fees. You can also, because there's no market makers, it's a peer-to-peer liquidity pool. You can check out all this stuff on the white paper and how exactly it works. But basically, if you're a liquidity provider, if someone gets liquidated, you get paid. Typically, the market makers are the ones making the money on the fees and the liquidations. Antarctic is the traders making money on the fees and the liquidations. So it's a totally different model here. And this has been created to bypass all the problems with KYC and all this other nonsense and exchanges freezing accounts when you make too much money and all this. No more of that. All right? It's a very new exchange. All right? Right now, I think the biggest position size you can enter is $250,000 because we're doing it slow. But this is going to change the name of the game. All right? But if you still want to trade on a centralized exchange, I'm trading on BloFin. I'm trading on WEEX. I'm trading on MEXC. All that good stuff. All right? All that good stuff. Now, I also want to take a quick look at the stock market. We got 10 minutes before the big move. I want to take a look at the ES. Oh, man. All right, let's take a look at ES real quick. ES mini futures. All right. And we got a super chat in the house as well. Look at this, guys. Bouncing perfectly from the golden pocket, which was a level we gave, literally, back when we were getting that first dump. All right, when we were losing 5,800 and this monthly order block, this was the target given on this channel because you don't want to mess with the Fibonacci golden pocket. Look at that wick. Look at that strong monthly close. Looks like the stock market wants to get another push to the upside too. Now, I'm not saying it's gonna, but I am just saying we are seeing the Fed inject money into the system. Let's see how Jerome Powell comes out today. Is he going to be dovish? Is he going to be hawkish? If he's dovish, we could see the stock market a little bit. It's not looking as bullish as Bitcoin, definitely not. But nonetheless, we still have a hidden bullish div on the weekly time frame here. We have a hidden bullish div on our 4-day. It's definitely not looking as bullish as Bitcoin, guys. I'm going to be honest with you. I'll be honest. All right, let's check out the calendar here. Let's see how much time we got. We're going to give ourselves a little bit of a refresh. And a major shout out to our super chat, Robert Harold. XRP to the moon. Rate drop, Daddy Powell, please. Shout out to Robert Harold. He wants XR Pizzle to go to the moon. Let's check out XR Pizzle. All right, let's check out that monthly close. All right, so look, XRP. what has happened here on XRP? Monthly close. We got a move down. We took the liquidity that we had sitting at $1.77. We get a strong monthly close above the level. Bullish engulfing candle. Check out our weekly. You know, look, Bitcoin's going to lead the way here. Bitcoin's the leader of the pack. Bitcoin is the leader of the pack. But XRP definitely closing a candle above the liquidity is the first step in the bullish direction. And if Bitcoin's going to break 97K, the altcoins are going to follow. Major shout out to A4D Woody. God bless you, bro. Thank you so much for your super chat. Much appreciated, my man. God bless you. May God bless you. May he bless your family in Jesus' name. Please, Moon. Casper doesn't like the XRP. Casper doesn't hold any Ripple. Alright, Casper doesn't hold any XRP. I ain't got nothing too much against it, but look, ever since I got into crypto, XRP was the enemy. Alright, XRP represents the banks. Now Bitcoin represents the banks too. Alright, crypto in general right now has been co-opted by the system. Alright, we got BlackRock ETFs. We're watching Jerome Powell to trade Bitcoin. Is that insane? Look, fundamentally, Bitcoin is way different than XRP. But I've never really been a fan of XRP. Do I think it's going to pump? Yes, it's going to pump, guys. But I don't hold it. Alright? Oh man, we got some smooth jazz in the background. As Jerome Powell's about to come out the dang closet, why don't we put on a little something more, a little bit more hype. As we get ready for these rate decisions, we're going to watch the volatility live, baby. We're going to watch it live right here on the Jason Casper YouTube channel. The best crypto channel in the world, as Bitcoin's getting a little bit of a pullback right now. Let's check out the order flow. Check out order flow here. What do we got? We got a whole bunch of nothing. Wow. We had 18 million long. Somebody opened an $18 million position, it looks like. And it's still open. It's still open. So, interesting. Does someone know something we don't know? They opened an $18 million long and they're holding it underwater. Ooh. That's scary. Looking berry. A little bit hairy. Alright. So, let's see what happens, guys. Again, this level, this white line on the chart, is the level where if we break it, man, we are pumping to a new, at least 105K. But if we reject here, we can expect a pullback. Coming all the way potentially back down to the 70s to the bottom of our range. Okay, this is so key right now. Let's wait until Jerome Powell starts speaking before we make a move. Now, let's also just discuss, you know, remember, we're always looking at the side of his range here. So locally right now, this is our range. All right, what does that mean? That means resistance is here, and that means major support is going to be here. All right, let's move it up just a smidgen. All right, so these are our two local levels. We start to lose $92,000. We're looking down to 90,000. We start to lose 90,000. We're looking down to 84. We lose 84. We're looking back to the 70s. All right, we take it level to level, step by step. Step by step, level to level. Bitcoin, give me all bass and no treble. As we wait 6 minutes until Jerome Powell comes out the closet. Man, I am so dang excited right now. I'm so dang excited. I'm so excited. You guys excited? Pop a 1 in the chat if you're excited. You guys excited? If you're excited, pop a 1. Pop a 1. Pop a 1. That's my rap name, Papa 1. They call me Big Papa 1. That's my rap name. Big Papa 1. That's my rap name. Here we go, baby. We're getting a little bit of a dump, though. A little bit of a dump. Yeah. Jay Casper, call me Big Papa 1. Coming to the Bitcoin charts to have some fun. Jerome Powell coming out the closet. Is he gonna cut the rates or will he pause it? Maybe he will cut them, maybe increase. Bitcoin price looking juicy like ETH. Make a juicy turkey sandwich, give me extra cheese. Then we pump it to the next level, baby, please. Yeah, Jerome coming out the closet. Hopefully he starts to pause it. And don't you know he got a dirty secret? If he talks, then we will peek at the Federal Reserve. Ain't federal at all, and it's not a reserve. Gasp and call, because you know they ain't got no money, just fiat. Stealing from the poor, making the rich richer. Yeah, but that's okay, cause we know the game. Trade the charts just like every other single day. Coming to the treadmill just to get paid. Bitcoin, take liquidity, and then we go away to the downside. Look at it ride like a water slide, swishing water side to side. Next thing you know, Jason Cashback got the jive. Can't we sit here? No, we ain't got no time, cause in 4 minutes Jerome Powell spits it. Got big biceps, you know he eats his spinach. Next thing I know, we're outside digging the ditch, because we got the dirt looking like we're mad rich and mad poor. Bitcoin price about to blast through the door, coming down 96,177. Liquidity grab, do we take it, then we pump back to heaven. We got the magnitude about to take it off. Bitcoin price about to hit the spot, then we rock it. Can you top it? Then you spot it. Hopefully we don't drop it. Sonic, robotic, you spot it. You know we're coming back to socket. In the ring, we do it in the docket. Yeah, candles turning purple, then they're turning blue, cause Bitcoin price about to show you what she is about to do. J. Casper coming to the chart. Blue and purple candles like a work of art. And don't you know my trades are only in the green, cause they call me J. Casper, the trading machine. Papa 1, that's my rap name. Papa 2, that's how I play the game. And don't you know we're coming here just to make the change. Swing failure pattern always is the same, cause we took liquidity down below. We got the wick with the stop hunt. Look out, you know, to the pump. About to 97.7. Then we get a pull back, not the heaven but the hell. What is the smell? What's the sound? They're about to ring the bell. About to make the decision. Rate cuts, Bitcoin. Hopefully you're not nuts, but 2 minutes, 18 seconds to the decision. Bitcoin looking like she's in such derision, cause she's coming to the chart, then she has the vision. Put on your glasses, hopefully you're not spinning around the room, too drunk to drive with the trading and driving. You know we drive side to side. Got the countdown, only 2 minutes. Sit back while Jason Casper spits it. Yeah, Jerome Powell again, hanging out with all his good friends. The press conference, then we do it again. They ask him questions. How's the inflation, my friend? He says, well, we're getting it down just to 2%. People look at him like they're feeling bent. 2%? Are you nuts? What about CPI? He says, it's all fake. But don't start to cry, cause economy's all a game. Stays the same. Rich get richer and the poor take the blame. The 401k getting wrecked. Next thing you know, the rich are building decks. Talking about the decks in the oceanfront homes. Looking at the ocean. Stay alone. Bologna sandwiches. Take out the bones. Chew the meat, spit it out. You know you're looking alone at the phone. Making calls every single day. Coming to the charts to get paid. I give it to you straight, never I give it gay. Cause we're on the treadmill just to make the change. Yeah, you know I got my new shoes. All we wanna see is candles turn blue. We got the rising wedge, bars in my head. Bitcoin price in the green, bears are dead. Here we go. Here we go. Here we go. All right, guys, 1 minute. 1 minute, 1 minute. Let's get on some good epic 1 minute, 1 minute music for this rate decision. Oh man, 1 minute. I'm so excited. I'm so excited. Here we go, baby. Let's see what happens here. Eight seconds. 5, 4, 3, 2, 1. Oh man. Here we go, baby. Here we go. 3 blue candles on the 2 minute chart. Let's see what's happened. Okay, no cut. The same. They paused. All right, we're getting a little bit of a purple candle, a little bit of a blue. Oh my goodness, here we go, baby. We're gonna go down to the 5-second time frame. See the volatility coming in. Oh my goodness, would you look at that bullish engulfing? Oh my goodness, look at the pump. Oh my goodness, wow! Whoa! 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 Oh no! Oh no! We're done! Oh, what? Oh, hang on! Oh, what is going on right now? Oh my goodness, I have never seen such a thing in my life. Oh, here we go, baby. We're pumping. We're pumping. Yeah, let's take a look at the order flow. We got a decrease of OI. Look at this candle. It's quivering. The candle doesn't know what's going on. Can we break? Can we break? Can we pump? Come on, Bitcoin. Come on, baby. Let's check out the stock market. Stock market as well, totally indecision right now. They don't know what to do because things have stayed the same, but here's the deal. Wow, purple candle, but now we got a blue. Now look, stay calm, Jason, stay calm, Jason, stay calm. They're gonna put you back in the institution. You know what they told you to do when you were feeling a little crazy? Put on those special glasses, they help you relax. Whew, look at this juicy blue pump that we're getting right here. Now look, here's the deal. Let's get serious. We have to wait until Jerome Powell starts flapping the gums before we get overly excited here, okay? We have to wait for JP to start flapping the gums before we get overly excited because there's no cut. That's to be expected, all right? Everything's as expected right now. We want to wait and hear him speak. Is he going to be dovish or is he going to be hawkish? In approximately half an hour, we have the FOMC press conference. We're going to watch it live here, all right? We're going to watch it live right here. You know, what's going to happen? How's he going to come out, all right? So 19 hours ago, Yahoo says traders are betting on a slower pace of rate cuts. That's bearish. That's bearish, okay? We have to wait and see what he says, all right? Is Jerome Powell going to come out looking like this guy? All right? Is he going to come out looking like this guy here? Nice and happy? The happy dovish JP? All right? We're going to be looking like this? Or are we going to be looking like the hawkish JP? All right. It really depends. All right? Whoa. What's that? It depends, guys. All right? It depends! Speaking of depends, guys, link in the description. I never trade without my depends. All right? Because you know the price won't move until you go pee. All right? Then you miss the trade every time you pee. So how do we negate that from happening? As traders, we focus on what we can control. We can't control our bladders, but we can control what we wear down there. Link in the description. You get 10% back. Drink a small coffee, pee a large coffee, 10% extra, right into the depends. Link in the description, 10% cash back. All right, now, it's basically going to be a battle. Is it going to be dovish or hawkish? Dovish or hawkish? Dovish or hawkish? We have ourselves half an hour to figure it out. 5-second time frame. Bitcoin price right now. Look at this crazy pattern. Look at this pattern right here. Oh, man. Haha, yes. Looks like the bullish sea squid pattern. Alright. Let's see what happens here. We do have some bear divs on our 5-second. Alright, we're going to have to wait. Let's pop on over to our open Bitcoin long trades. We're up right now. Here, we're getting a little bit of a pump, baby. Let's go to our 1-minute time frame over on Antarctic. We're getting a pump. We're up $3,700. Already locked in $5,000. We're up another $17,000. All right, so we're up 20 grand. We've already locked in 15 grand, baby. We've already locked in 15. Come on, can we make it 20? Can we hear 20? Come on, baby. Let's go, baby. Let's go. Come on, Bitcoin. Half an hour until Jerome Powell comes out. Now, guys, I got to give some major reminders. Number one, we're doing a $1,000 giveaway. All right, a $1,000 giveaway today on this stream. So make sure to like the video. Like the video. Subscribe to the channel, okay? Also, got to give a major reminder that I have just released the first session of a free trading course on YouTube. Check it out. Subscribe to the channel, free trading course. All right? Free trading course. First session is out. Second one will be out in about an hour and a half. All right? And the following one will be out tomorrow, so on and so forth. Also, got to give a major shout out to the Casper Crew VIP Discord. JasonCasperTrading.com, where we give the trade setups in advance. And we talk about our bias and the next levels that we're looking for on the low and high time frames. Best trading community in the world. Trading group, JasonCasperTrading.com. Got to give a major shout out to Antarctic Exchange. Decentralized exchange. Lowest fees out there. Got to give a major shout out to BloFin. 10% cash back if you use my link. VIP fees if you use my link. $1,000 future bonus if you use my link. All these prizes potential if you use my link. And they are graciously giving a $500 giveaway today to 5 of you. 5 people will win $100 courtesy of BloFin to trade with today. If you sign up to BloFin using my link, you're eligible to win. You don't have to deposit anything to win. All right, you don't have to deposit a dang thing to win. All right, it's actually a good deal. All right, let's see how Bitcoin's doing. All right, we're getting a little bit of a perp. The best thing about Antarctic Exchange, guys, is the colors. Everything's blue and purple. All right, just like me. Everything about me is blue and purple. What's the difference between the free one and the paid one? There's a few differences. The paid ones go into a little bit more detail, my own personal trading style. The free one is more of just an overarching, less of me and more of just general. All right, here we go, baby. We're taking a dump. A little bit of a dumperoni and queso. Shout out to Space Shuttle Blue, who's long. Shout out to War Raz. Watch the first video of the course. Fees. The fees for Antarctic are even lower than MEXC. MEXC now is 0.04 without the 50% discount. Man, we got some smooth jazz playing. All right. We've got some smooth jazz playing right now in the background. Ladies and gentlemen. Man, let's lower it a little bit. All right, welcome to the Smooth Jazz channel. Am I in a short trade? Yeah, I'm still in the short trade from before. Yep, still in the short trade from the high. I still am. Yep, still in the short trade from the high. But I'm hoping for a little bit of a pump. All right. Let's see who else we got in here. Imagine it dumps to 90K. That would be crazy. 95.5 incoming. Yeah, that's probably good. That's a good level. All right. All right, we're starting to get a little bit of a dump here. Let's check out order flow. Let's check it out. Let's check out order flow, then we'll check out market Cipher. Okay, so really, guys, here's what's so interesting right now about this. We had 18 million longs open. They're still open, and they're underwater. So we might just squeeze those longs and then get a little bit of a biz ounce, baby. All right, might squeeze the longs, get a little bit of a biz ounce. All right. Squeeze the longs, get a little bit of a bounce. Let's check out market Cipher B. See how MCB's looking up in here. All right, let's check it out. 12-minute time frame market Cipher B. What do we see? Come on, market Cipher. Come on, load. Okay. All right, so sadly, guys, we actually do see a pretty bearish pattern up here. We are seeing the bearish divergence playing out here. So honestly, given the fact that we are at key resistance and we're getting a bit of a rejection, I say we need to be aware of this trading range right here. All right. I see we need to be aware of this trading range right here. All right, our first major support is going to be right here at 95.8. All right. That's going to be the value area high. Then we need to be aware of 94.8, 95K, give or take. Fibonacci golden pocket. And then we need to be aware of the value area low. So if we get a dump right now, which it looks like we're going to, 95K is going to be an important target to hold. If we don't hold 95K, we're looking to come down to the value area low. All right, here we go, baby. Here we go, getting a little bit of a move down. In about 20 minutes, JP is going to come out, and he's going to tell us what to expect in the future, and I'm hoping that he's dovish. I'm hoping that he's dovish. Six-hour blood diamond right now. Shout out to Andy from Bitcoin Census. What is going on, bro? Guys, if you're not subscribed to Andy, go subscribe to Andy. All right? We're going to blow right through 95.8, says someone in the chat. All right. All right. Are we bearish now? Are we bearish? Looks like we're going to lose 95.8 and come down to 95K. I can't wait for Jerome Powell to start to speak. High time frames are very bullish right now for Bitcoin. Fundamentals and technicals, in my opinion, on the high time frame are very bullish for Bitcoin. I'm a bull on Bitcoin. And this little volatility here, it's not a big deal at all. Now, obviously, we're finding a little bit of support at support. It's no surprise. All right, let's see what happens as we come to the white line of decision. 95.8. We're tapping into the level. We're literally tapping into it right now. What's going to happen? Go to the 5 second. Looks like the bulls are trying. But are they? Oh, look at that massive bullish engulfing candle on the 5 second time frame. It's because it's just a key level of support on the chart, guys. It's amazing how people say technical analysis doesn't work. Even on the 5 second time frame. Isn't it crazy? The white line I draw on the chart. The white line I draw on the chart. Why are we bouncing from it? Look at that. on the 1 minute time frame. Why? It's because technical analysis works, man. All right. I'm not saying this is the bounce, but the reason we're getting a little bounce here is simply because it's a key level of support, right? So when you know how to identify those levels where you know things are likely to get a reaction, it can really help you as a trader, okay? Now let's see what happens as we try and backtest this level. Because right now, the green line, if we can reclaim the green line, things are bullish. If we reject from the green line, we're coming down to 95K. All right, 19 minutes until Jerome Powell. Shout out to Sue Deep in the chat. Shout out to FitGenius618 in the chat. Shout out to Max, 5-second trading. You know what's funny? I actually have made a lot of money trading on the 5-second time. I'm not even joking about it. All right, Andy from Bitcoin Census. We've got the British accent. Major shout out to Daniel James. I think we owe ourselves a big reward for supporting this community. Major shout out to Dano Crypto. Major shout out to Liam Fitzpatrick. Just opened a long and a short. Alright, it never really works out that way, my friend, but I hope it works out for you. Major shout out to J-Boy Bullish. Shout out to Muma Bull, who says no rate cuts equals dump, sell the news. No, I think this is exactly as expected. I think this is exactly as expected. Let's check out some other things. Okay, so gold right now, getting a massive pump on this news. Let's check out the stock market. Massive dump. S&P 500, massive dump. But here's the thing. S&P 500 has just taken the lows. ES, so we're at support. We're at support. If we can hold this level, could be good. If not, then we probably are coming down to our next support. Let's pull a fib here on the ES. Yeah, we're probably then going to come down to the POC / golden pocket of this old range. Actually, I mean the value area low, which also is a high volume node here. Oh, it's because I didn't extend right. Let's fix this. Boom. Bam. There we go. Yeah. We don't hold the green level. We're coming down to 55.9.5 on the ES. Gold getting a big pump right now. Let's see how Bitcoin's doing. Remember, guys, Bitcoin is trying to reclaim our key level. Come on, Bitcoin, can we do it? Let's go to the 5-second. Oof! We're getting a little bit of a rejection from this. Look at this. Look at this, man. Isn't it crazy? Isn't it crazy? People say technical analysis doesn't work. I drew 2 lines on the chart. I drew a white line on the chart, and I drew a green line on the chart. Both of the lines respected to some capacity. Isn't that crazy? It's because technical analysis works, man. These levels, they work. They work. Now, if we can hold above this green line, that's good. That's good. That's good. Rejection from the green line, not good. Not good. Why is the green line so important? Because the green line, guys, is the low of the range. All right, we've taken all the stops. Everybody who's basically longed here, we've taken the liquidity. Now we're going to reverse it on them. We are getting right now a very interesting candle. Big increase of open interest. 31 million volume on Bybit right here. Mostly shorts. Mostly shorts opening at the low. A few longs, but mostly shorts. That means we could trap some shorts at the low. Come on, Bitcoin, are we going to reclaim that green line? Yes or no? Yes or no? 5 seconds says she wants to reclaim. Yes! 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 Here we go, baby. 15 minutes until Jerome Powell gives us his statement. We're reclaiming the green line. We're reclaiming our green line. Oh, 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 ah, oh! We're losing the green line. Oh, my goodness. Uh-oh, here we go. We're pumping, baby. We're pumping. We're pumping. Come on, baby. Come on. We're pumping. We're pumping. Come on. We're cheering for the Bulls. Here we go. We're reclaiming the green line, baby. Yes. Massive bullish engulfing candle right now on the 5-second time frame. We got a 32 million volume candle closed right here on our 15-minute chart. Negative delta, nothing too serious here. All right. Uh-oh, we're losing the green line. Oh, no. Oh, no, we're dumping, but look. Money flow getting thick here. Can it amount to anything? Whew, man. Oh, my goodness. Oh, this is the scariest, most exhilarating thing I've ever been through in my life, but fear not, guys, because very soon, Jerome Powell is going to be speaking, and he'll clear everything up for us. He'll clear it all up. All right, he'll clear it all up. Bologna sandwiches. Bologna sandwiches. All right. Bologna sandwiches. Here we go, baby. Green line holding. Can't wait for JP to come out. Okay, guys. Now look, we're gonna be doing a $500. We're gonna be doing a $1,000. We're giving away $1,500 this stream. We're giving away $1,500 this stream after Jerome Powell speaks. All right, he's gonna be speaking soon. He'll be speaking soon, guys. I wonder how many steps I'm gonna get in on this stream. It'll be crazy. I'll be able to eat a whole pizza after this and stay shredded. I'll be able to eat a whole pizza for dinner and stay shredded, man. A large pizza, extra cheese. Wake up tomorrow with crispy 6-pack abs. All right? Isn't that crazy? That's what a walking desk can do. That's what a walking desk can do for you guys. Shout out to Dano Crypto. Where's 6 Juanita? So here's the scary thing. All right? We're at 6 Juanita right now. We're at 6 Juanita right now. We go ahead, we pull our fib from the high to the low. This is why this is the line in the sand. This is why, in my opinion, Jerome Powell's sentiment is going to determine whether or not we break out and hit $105,000 or we break down and come back to the 70s, right? We're at the top of the sideways range here at the Fibonacci golden pocket. All right, and yes, I'm bullish on the high-term timeframes, but this is the place where if we're going to get a pullback, it's going to happen, okay? So in my opinion, Jerome Powell is going to set the tone for the rest of the month of May of whether or not we get a pullback, okay? Or a blast off. It's the month of May. It's the time where we get the big move. This is the time, based on the market cipher confirmation of the green dot, this is the week where we expect that big move to begin. All right, we expect a big move to happen around this week. All right. 97-100, here we come. Shout out to Dano Crypto. J-Boy Bullish, I eat a whole watermelon in a sitting, then I'm pregnant. Yeah. It can happen, man. Honestly, if I ate a whole watermelon in a sitting, I'm pretty sure it would make me expel liquid fecal matter in a very short period of time from the rear. So be careful with that, you know? You gotta take your watermelon in moderation, my friend. All right? You thought I was bearish this week? Yeah, so Jesse Jax, I am bearish this week. And so far, we've had nothing. But yeah, I'm leaning more bearish. I'm leaning more toward a pullback. But this bear div didn't play out. We didn't change market structure, and now we're getting a green dot. So, you know, so far I've been wrong about. I thought we were going to get a bit more of a pullback from here. I was hoping it would happen Monday and Tuesday. I was hoping we'd get a pullback leading into Wednesday. But that didn't happen. So if we start to get our pullback today, I think today is going to be the day where, depending on what Jerome Powell says, that's going to either cause us to get the pullback we've been waiting for, or break and hold, and then 105K, right? This is at resistance. This is at the POC. So this literally is the make it or break it level, all right? This is the make it or break it level. So let's see on what we're waiting. We got 10 minutes. 10 minutes for JP to start shaking the pie hole. And really, is he going to be hawkish or dovish? Hawkish or dovish? Hawkish or dovish? Hawkish or dovish? Hawkish or dovish?
Make sure to like and subscribe to Jason Casper. He's the best YouTube trader in the world. He's getting huge. Shout out to the Casper crew.
I'm hoping that he's speaking now. Jerome Powell speaking now. Shout out to King Crypto. Jason, why are you Disney Plusing us on the program 18 days? Can we Netflix? Nah, bro, I can't do that. It's not good for the YouTube algorithm to release 18 videos in one day, bro. Sorry, man. Look, take it back to old school. Remember watching American Idol and Survivor and Fear Factor? You have to wait a whole week. All right, I'm just making you wait a day. All right, relax, man. Reset your dopamine a little bit. Reset your dopamine a little bit here. All right, someone says Jerome Powell speaking now. Let's see. No, he's not. He's not. If he is, it's fake. All right, on the Federal Reserve website, he's not speaking yet. So this is the macro Fibonacci golden pocket. We're at macro resistance. We're at local support. Macro resistance, local support. And we're reclaiming our green line here, guys. All right, we're reclaiming our green line. This is key support to hold. White line is key support to hold on Bitcoin. Let's check out the dollar, getting a dump. Let's check out the S&P. All right, look at this, guys. The ES is getting a bounce from the key support. Liquidity grab and bounce. Now we wait for Jerome Powell. We're hoping he comes out looking like this. All right, this is what I want to see. If I see this, I'm gonna be scared. All right. Whoa. Whoa. Getting a little bit of a Big Daddy perp coming in here. The Big Daddy perp, Big Dirty perp coming on in. Shout out to KAERF. KAERF says rally incoming. I hope so. There's a theory about the color of his tie, right? Yeah. Yeah, there is, and you know what? I'm not even totally sure what that theory about the color of Jerome Powell's tie is. You know, I haven't been paying too much attention. But, let's go, baby. Let's go. Let's pump the Bitcoin straight to 100K. We got 7 minutes. 7 minutes until Jerome Powell starts his speech. 7 minutes. Just enough time to sing the pump song, I think. Yeah, you know what? Let's see if we can't pump the Bitcoin price with the pump song. All right? I think we could pump it with the pump song a little bit. Here we go, baby. About to pump Bitcoin straight to 100K. Ladies and gentlemen, this is the pump song guaranteed to pump the Bitcoin price every single time. Sometimes it has a delayed effect. Alright, we're gonna pump it, baby. Let's pump! Here we go! Yeah! Yo! Now we're gonna pop. We're gonna dump. Now we're gonna pop. We're gonna dump. Now we're gonna pop. Pop the Bitcoin, baby, let's go. We're gonna dump. Now we're gonna pop. We're gonna dump. Now we're gonna pop. We're gonna dump. Now we're gonna pop. Pop the Bitcoin, baby, let's go. Yeah. Yeah. Here we go. Let's pop. Alright. It looks like it might be working a little bit, guys. It might be working. Here we go. We're gonna dump, no we're gonna pop. We're gonna dump, no we're gonna pop. We're gonna dump, no we're gonna pop. Pop the Bitcoin, baby, let's go. We're gonna dump. We're gonna dump. We're gonna dump. Now we're gonna pop. Pop the Bitcoin, baby, let's go. Alright, 5 minutes until Jerome Powell comes out the closet. Here we go, baby. Where's the stop loss? There is no stop loss! There's no stop loss, baby! Come on! Let's pump it, baby! There's no stop loss, you can tell!
We're gonna dump, now we're gonna pop. We're gonna dump, now we're gonna pop. We're gonna dump, now we're gonna pop. Pop the Bitcoin, baby, let's go. We're gonna dump. We're gonna dump. We're gonna dump, now we're gonna pop. Pop the Bitcoin, baby, let's go. Yeah. We're pumping Bitcoin, baby. Yeah, we're pumping Bitcoin, baby. Yeah, we're pumping Bitcoin. Yeah, we're pumping Bitcoin. Yeah, we're gonna dump. Yeah, we're gonna pop. Yeah, we're gonna dump. Yeah, we're gonna pop right now.
Yes! It's working, baby! Look at that! Minutes. 3 minutes until JP comes out, baby. 3 minutes. Here we go, baby. It's working a little bit. It's working. 3 minutes, guys. We're pumping and we got 3 minutes. 3 minutes and we're pumping, baby. Yeah, Jake Casper and we're pumping. Bitcoin price, you know she ain't slumping. And you know we got about 3 minutes before JP comes out, so eat your spinach. Here he comes coming out the closet. He can cut weights, you know he paused it. But now we start the pump after liquidity. Grab below, now listen to me. We got about 2,000 in the chat, about to do a giveaway. Now what you think about that? Jason Casper in his wig and a purple hat, flying up in the air at night like I'm a bat. Talking about the bat, playing baseball with the call like the water slaw. Next thing you're eating coleslaw, got the hamburgers and the hot dogs to eat. Jason Casper on the treadmill, always on his feet. Next thing you know we rock it, can you spot it? To the golden pocket, then we top it. Next thing we never drop it, cause we are the market makers and we're in control. Bitcoin price pumping and we're on a roll. Candles turning blue and then they turning purple. Jason Casper such a nerd, you know they call him Steve Urkel. Next thing you know I like to slurp, yo. Got the gas in my belly and I burp. I got the gas in my belly, then I take the purple candle, spread them on the bread like grape jelly. Then I grab the fat rolls hanging on my belly, pull them up and down to make your best friend jelly. Yeah, cause you know we got the bread. Jason Casper got the bars in his head. About 1 minute till Jerome Powell comes out. Hopefully we pump, my smile won't pout, cause I'm looking for the next all-time high. If we start to jump, you know your boy Jay will cry. Got the spread wings and then we fly till the Bitcoin price hits the next all-time high. And oh snap, yeah, we're coming to resistance. But if we break out, then you know we go the distance. Then we rock it, can you sock it to the next golden pocket? Bitcoin pumping, baby, please hope we never drop it. Don't you know I'm wearing shoes in the socket? Next thing you know, I'm looking for the spotlight. Yeah, I take the cream cheese, rub it on my knees, baby, please, cause we're looking at the extra cheese. Ethereum, doing it today. I give it to you straight, I never give it to you gay. Cause you know my name is Trading Master J. We're coming to the charts so serious we don't play. Do it the same way every single day. Outside in the garden digging with spades. Yeah, cause we're coming to the top. Bitcoin, purple candles, better stop. Bears, this is a message to ya. Hopefully you don't mess with me, cause I'ma screw ya. And if you're a bear, you'll be in your underwear, so embarrassed because over there you're on stage in chains, looking like you wanna make the profits in the spades. You know the trades, never in the red, they're only in the green. Jason Casper on the treadmill like a nice trading machine. Okay, time for Jerome Powell, baby. Here we go. Here he is. All right, let's pull him up. Pull up Jerome Powell. Where is he? Here he is. All right. Hang on. There he is. Hang on. Hang on. Hang on. What is going on? All right, we got to mute this. All right. All right. Let's see. Jerome Powell. I don't hear him. Do you guys hear him? Let's try and refresh this.
Policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, We would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out. And also, when they do settle out, what will be the implications for the economy, for growth, and for employment? I think it's too early to know that. So, I mean, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think if you look where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's naturally a lot of PTSD around 2021 and supply shocks, but there are some who argue that the current situation has notable differences. Energy costs are down, housing imbalances look nothing like they did 4 years ago, labor demand appears to be gradually cooling with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And, we'll see the administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
As I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and as that develops. And I can't really give you a time frame on that.
Janelle.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, so let's look back and see where we are. So to go through 2024 up to the day, we've had unemployment in the low 4s for more than a year. We've had inflation coming down now in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we would never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Colby.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
So first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well. participation, I mentioned, at a good level. So, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. Yeah, we're not in this situation, but the situation is if the two goals are in tension, so let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. We haven't faced that question in a very long time. So again, difficult judgment to make, and not one that we face today, and we may never face it, but we have to be keeping it in our thinking now.
Edward.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid, that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
It's going to depend. I think you have to just take a step back and realize this is why we are where we are, is, we're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't. And we just don't know. Until we know more about how this is going to settle out and what the economic implications are for employment, for inflation, I couldn't confidently say that I know what the appropriate path will be.
So following on that, just, so then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Howard.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have risen. But they haven't materialized yet. They're really not in the data yet. So that tells me more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place, and the right thing to do is await further clarity. And there's usually things clarify and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that, but in the meantime, yes, we're watching it extremely carefully like everyone is, but don't see really much evidence of it in actual economic data yet. And by the way, consumers keep spending, credit card spending. It's, it's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
Michael McKee.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact that you did QE and QE and QE and went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. Look, I would say this: we did things. Essentially, we're on an emergency footing for a couple of years in the pandemic, and it's very fair and very welcome for people to look back over what we did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we, of course, tapered and everything. And then we immediately went into QT, and, we're down a couple of trillion. But I get we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. We knew doing this in real time that we weren't going to get it perfect, and those kind of after action kind of looks are essential. And we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one thing, one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And we dropped out of the network of greening the financial system. So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And the risk is if you go for things that are really not on your mandate, then why are you independent? And I think that's a very fair question. I do think we've done a whole lot less on climate than some people seem to think we did. Anyway, that's what I think.
Should you have taken on the question of bringing unemployment rates down for specific categories?
We didn't do that. What we said was that we never targeted any unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant by that was we're going to consider the totality of the country as we look at our maximum employment goal. Of course, we were never going to target any individual group with that, but I think some people, wanted to hear it that way. But that's not at all what we meant. So that's just not a correct reading of our. But I can see how maybe people found that confusing, and we have to take that into consideration.
Jolene.
Hi, Chair Powell. Thanks for taking our questions today. I'm Jolene Kent with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses, big and small, are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the breaking point? What would have to happen to prompt a rate cut specifically?
Well, so we really don't see in the data yet big economic effects. We see sentiment, there are concerns that higher prices may be coming or things like that. So they're worried now about inflation. They're worried about a shock from the tariffs, but they really haven't. That shock hasn't hit yet. Okay, so we're going to be looking at the not just the sentiment data, but also the real economic data as we assess what it is we should do. And remember, there will be two effects. One of them would be weakening economic activity, which translates into higher unemployment, and the other would be potentially higher inflation. Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear what the appropriate response for monetary policy is at this time. And and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So people are feeling stress and concern, but unemployment hasn't gone up. Job creation is fine. Wages are in good shape. People are not layoffs, or people are not getting laid off at high levels. Initial claims for unemployment are not increasing, in any kind of impressive way. So the economy itself is still, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
Chris.
Hi, thank you. Chris Rugaber, Associated Press. Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, what kind of interest rate decisions you will make later this year. So does that, in March, there was guidance that 2 cuts might happen. 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events at this point?
We don't do a summary of economic projections at every meeting, as you know. We do it every other meeting, and so this was the meeting when we didn't do it. And we don't also kind of poll people, so I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we have the June meeting, and you'll have another SEP. I'm not going to.
All right, guys. He has nothing to say, so we're going to do a $1,000 giveaway. All right, we're going to give away $1,000. Right here, right now, we are going to give away $1,000. All right, so here's what I need you guys to do. If you want to win $1,000, here's what I need you to do. All right, you want to win $1,000? You want to win $1,000? Who wants to win $1,000? Put a 1 in the chat if you want to win $1,000. I think you guys do. All right, if you want to win $1,000, here's what we're gonna do. All right. I need you guys to spam the chat with your USDT address. All right, spam the chat with your USDT address. And what I'm going to do is I'm going to count down from 10. And I'm going to, whoever is highlighted on my cursor here, when I count down from 10 with your USDT address, could be any network, wins 1,000 USDT. All right, so I'll give you guys some time. Pop in your addresses. Pop in your addresses, and we're going to count down from 10. All right. You guys ready? Are you ready? Are you ready? You ready? All right, here we go. Here we go. We're going to count down from 10. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, boom. All right, let's see who our winner is. And our winner is Vince120. Shout out to Vince120. Vince120. Congratulations, bro. All right, now I got to find you, Vince120. All right, congratulations. Where is Vince120? Ah, here he is, Vince120. Ah, now I lost him. Where's Vince120? What the heck? All right, hang on. I just saw you a second ago, Vince120. If not, I'll have to use the screenshot and manually type in your address. Now, don't worry. There's still a chance to win $100 giveaways courtesy of BloFin. All right? Still a chance to win $100 giveaways courtesy of BloFin. Crap. Vince120, I lost your dang address, so I'm going to have to manually send it to you from the screenshot, all right? All right, now what we're going to do is we're going to give away $100. So if you signed up to BloFin using my link, let's get some music on in here. If you signed up to BloFin using my link, what I need you to do is get your user ID number from BloFin, which can be found underneath your profile picture on BloFin. All right, get your user ID number. Now I want you to spam the chat with your user ID number. And when I count down from 10, the first 5 user ID numbers are gonna get $100 put into their account. All right, so we'll give you guys some time to get your dang user ID numbers. And then we'll count down from 10. All right, here we go. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right. Let's see, who is our... Okay, so Crypto Incognito with his dang big one here. Doesn't even have a user ID. Okay, so let's see the first 5 after Crypto Incognito. Where's Crypto Incognito? All right, here we go. The first 5. Oh, man. You know what? The YouTube chat is working differently than usual. Okay, here he is. Crypto Incognito. Okay, so we have ourselves Myth War. Myth War is our winner number 1. Mythwar. Shout out to Mythwar. Winner number 1. Winner number 2 is FTF EU. Congratulations. Winner number 3, 4, and 5 are CKL Wukong, Carol Ortiz, and Spicy Noodle. Congratulations to y'all. You guys win $100 of money to trade, courtesy of BloFin. Will be put into your account to trade. All right. All right. Awesome, guys. So, congratulations to our winners. Congratulations to our winners, guys. Congratulations, congratulations, congratulations. All right. Well, what do you guys think is going to happen right now with Bitcoin here? Jerome Powell has a whole bunch of nothing to say. Jerome Powell's got a whole bunch of nothing. He's got a whole lot of nada. A whole lot of nada. So I can't listen anymore. I can't listen anymore. All right. Not sure what's going to happen. But anyway, congratulations to our winners. And I'm going to head out. So God bless you guys. I'll see you tomorrow. Peace.